General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, let's do the work. It's the middle of the week. Do we have a true anchor? I'm kind of leaning towards Monday holding as the anchor. I like the respect off the rejection block off of positive MU earnings. However, I'm not sure if that will be enough to push us up until the end of the week. I think Monday stays as the anchor. True. Adjust weekly buys template. I think lower prices after people find that something wrong with the positive MU earnings. They always find something to nitpick at. MU had great earnings, but they probably still sell it off. Note shift and framework hit rate. A lot of the moves have been happening overnight, and today was a good day to stand back just due to earnings nonsense. Had 2 case studies. No case studies, just studying. Time frame context review. It is week 4. So we've seen week 1, 2. Option expiry kind of did nothing. And we swept both sides of week 1. Still in premium of previous month's range. Kind of this gap. It's kind of been a big deal the last 2 weeks. I personally don't expect week 4 to do much. As you can see, we got previous week's high and low, and now we back in previous week's range. The value basically unchanged and rebalancing the weekly volume imbalance. Expansion mitigation, no real signs of expansion. Like we just seen, we still in the previous week's range. Decision quality, higher probability. I'll stop trying to get the stage 1 tops and bottoms for reversal entries. I let the move play out and buy the OB or fair value gap after reversal shows follow through. Narrative framework and accuracy has been good. The market has been moving better, and I'm getting used to when it moves, like its expansion schedule. Experience success failure, showing up daily, only taking good setups, keep going. Case study vault reference, no case studies. Days. Wednesday. It was definitely manipulation outside line, low confidence. I just seen it the morning it didn't look like a good market to trade. Thinking Monday will be the anchor. Is this playing out? Not really. I don't think that was terminus today. Just looking at NASDAQ. We just chilled all day, nothing. And then PM did the move. and respected the rejection block. I think that's the bait. Great day to take off. I know that the ADR was low and we were hanging out in Asia all AM session. Obvious time we chopping for earnings, which were good. The earnings were good. It's Monday, Wednesday range. We had this last week too. We just chilled inside the middle, created a dealing range, and Thursday, Friday closed in the middle. Last week we did the same exact fractal. We created the high Monday and low Wednesday and chopped that EQ. We can do it again just to satisfy the weekly volume balance. We can. Yeah. Nice rejection block reaction. This is the daily suspension block ICT's looking at. So I put this here to watch it as a mile marker. Below sell, above, we might be respecting it. And we still could be balancing this. Up, down, up, down. It's balanced now, shoot. I love the respect of the rejection block. I'm watching the low of the daily suspension block since that's what ICT called out as its mile marker. Yeah. And this daily fair value gap, we can, pump and dump for an easy day. It's SPX. It's the same. Basically the same, but no MU earnings didn't bring strength back to the whole market. Only NASDAQ. SPX on H1. Choppy day, not much to it. And here, kind of thinking the same thing here. Push up to this gap, sell off. This is bearish. We didn't have anything to do with this volume imbalance during the day. Opened here and closed here inside this rejection block, which is not rejecting. So this is super bearish to me. It invalidated it. We respected it here, but this could be the bait. And we post market, we're way up here. MU is the best. We're gonna hit all-time highs, but I doubt it. Let's see. SpaceX is back to pre-IPO lows. I put that in the notes, but this is low resistance. So here are the notes. MU pushing this after hours. SpaceX is back to pre-IPO levels. If buyers don't step in now, this low resistance liquidity run to this hit the 20-day low. NVIDIA was the post-market, it gained $1, but we closed below this weekly low. Previous month's low is next. Not a big sell-off on NVIDIA. This is strong. Previous month's low is next on the menu. No trade day while sidelining correct stance. And you earning low ADR inside previous day's value. Rotational day. Did the framework play out? Yep. What did we learn? It's a good day off. We're looking for tomorrow, a continuation. All right, that's all the chart work. Y'all have a good day. Peace.